We are about to see brand new record closes for both the NASDAQ and the Russell. All three, NASDAQ, S&P, and Russell, are to the upside. The Dow is slightly lower by 8 points. We're watching it with 3 minutes left to trade. Did you hear about this? The Business Roundtable kind of dropping a grenade today. 132 CEOs in the organization's latest economic outlook survey said that CEOs are increasingly uncertain. The head of the roundtable, Jamie Dimon, saying President Trump's trade policy is the fly in the ointment that could end the economic recovery. Our next guest agrees. He says financial markets have little room for error here. Joining us now, Cetera Financial Group Chief Investment Officer Gene Goldman. Gene, we all think that there are safe sectors. What are the ones that you say are safe, not safe? And what are the secret safe ones if what Jamie Dimon and the roundtable say is true?
Hey, Liz, thank you. Well, obviously, a great question. First of all, we do look at the business cycle. We do feel it is a little extended. But the good news about this business cycle is the fact that it's not like traditional business cycles in the sense that you have both rising rates and rising earnings. Most business cycles end with rising rates and declining earnings. So we're in this market where we've seen. I think markets have been very calm. They've done really well over the last few years. I'm a big fan of history, and I tend to say, listen, like FDR once said, a calm storm never made a skilled sailor. So things are changing. Market volatility is increasing dramatically. So what we would suggest is being out of these unsafe sectors. Unsafe sectors, consumer staples, telecom, and media.
And those are the everyone thinks they're safe, but they're not safe sectors, right? So you say consumer staples, utilities, telecom. So what are the safe sectors?
The safe sectors, just like your past guest, I mean, we love technology. Technology, you think about technology. Technology is in everything that we use today. Everything we use, we see, we touch, we feel. Technology is also very deflationary. It's very good for the economy. Also, we like financials. Rates have risen. Financials should do well, especially banks and broker-dealers. And then third of all, energy stocks. We've seen oil up about 7-8% this year. Oil companies, especially oil earnings, will do very well. It's right now, everyone asks, well, oil, what is it? What's driving it? Is it a supply or demand issue? It's really a supply issue. We've seen OPEC cut. Yes, there's some talk that potentially Saudi Arabia may bring more oil in, but it's really much of a supply issue. It's hard to get oil. It's more expensive to get oil out of the ground. Pipeline capacity is very tight right now. We like energy, technology, and financials.
Yep. See, folks, sometimes you think something's safe. Gene says it's not. We're going to put his safe sectors up on our Facebook.com/Liz Claman page. Gene Goldman, thank you so much.